Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you've all had a fantastic Thursday so far. Today, we're going to be diving into our daily cryptocurrency market update, and this is going to be really an overview of the market. There's lots of really important things taking place right now, and I really just want to make an opening statement. Yesterday, I had a comment on my video saying that, these updates have become somewhat depressing. And believe me, they've not meant to be. But at the same time, really what I'm trying to be is as realistic as possible and give my overview like we've been doing for the past couple of months that, look, markets don't look too healthy and that I can't really find a narrative at the moment, or I can't really find fundamentals or technicals to support, a raging blow-away bull market. I just don't think that bid is there. And I'm being honest with what I'm seeing, and I still see further downside. But what I really want to say, we started this channel nearly 2 years ago now. This is one of the first videos that I ever put up, and we were looking at the Wall Street cheat sheet, and we were looking at sort of boom and bust cycles, and crypto at this point was pretty much still in the doldrums. We were nowhere near 2017's highs. And one thing that kept me in the cryptocurrency market throughout 2018 and 2019, which back then was a tough time, but in hindsight was the very foundations that made me a good cryptocurrency trader and, more importantly, investor, and actually has really changed my life, was we understood the vision. And that vision hasn't gone away, ladies and gentlemen. And yes, things are down at the moment and times are somewhat hard, but they do recover. And that vision, the vision that I've had for the cryptocurrency market for a very long time, not only has never been so strong, but hasn't gone anywhere. We know the conditions that not just the cryptocurrency market, but markets across the board are currently under. That is still the play short term. But long term, ladies and gentlemen, crypto, blockchain is a technological revolution, very similar to the internet or any revolution prior to that, whether that be the car industry or anything of the sorts. And essentially, if you look at how all those technologies have impacted our lives, they start off very small, very skeptical. But now people drive to work every day. They use their phone every day. They're on the internet. All these things and these technologies that have come beforehand now play a key role in our lives. And we don't even realize a lot of the time. And that's the same sort of path that I think blockchain is on. And within that, you're going to get boom and bust cycles. And we know the current cycle, the current downtrend that we're in, has everything to do with the sort of macro headwind. Mainly to do with the Fed. What they're doing. We're going to talk about the Fed funds rate, which is the interest rate that the Fed set, and how this typically affects markets. Because when you see an increase in this, markets typically on the short term, and this is the S&P overlaid with the Fed fund rate in blue, on the short term sort of tend to see a downtrend until they sort of revert their policies and actually look to loosen monetary policy instead of tighten it. And if we look at Bitcoin, remember March 2020 saw extremely loose policy. Now we're at the other end of that and see an extremely tight policy, and we already have targets set for the lower 20K zone for crypto, and it could go lower depending on how things go. But we will come out the other end of this. I just really wanted to make that an opening statement because I think people think that I'm, pessimistic on the crypto space. That couldn't be further from the truth. Nobody is more bullish on this space than me, guys. And that's a rhetoric that we've been reiterating since the start of this channel 2 years ago. And in actual fact, been talking about crypto and how I think it's going to change the world for 5 years plus now. I truly believe in this space, but within that adoption and that growth cycle, you have boom and bust. And that's what we're currently going through at the moment, ladies and gentlemen, given the macro headwinds. So we'll start with the logarithmic chart. We'll look at the Fed funds rate. We're going to look at this article from Zero Hedge saying, don't fight the Fed. Do not bet against the Fed, guys. They're telling you and telegraphing what they're going to do. They want to bring down inflation. And the way that they're doing that is via upping interest rates, which has a knock-on effect on markets generally. The FX market is extremely interesting at the moment. We'll also talk a little bit about Paul Volcker. Because JP has essentially, on a number of occasions, really put across his admiration for Volcker. And Volcker was somebody that didn't hesitate to up interest rates extremely harshly back in the 70s, which of course caused markets to crash. And Jerome has essentially said, look, I will do the same thing if the measures dictate it. And right now we had a lower CPI number than we previously had. I actually think that CPI is going higher. We can tell that from looking at commodities, guys. Certainly in the UK, 9% inflation. I mean, people don't realize the gravity of that situation. For somebody like myself, it doesn't really make too much difference, you know? But for somebody who's just above that breadline, or even the middle class to the lower class, that is extremely damaging and recessionary in a number of ways. So we'll talk about it all, guys. Let's get into it because we love to ramble on, but I've just got so much I can say to you. Also, guys, we did mention our Discord that we're going to be starting in the sort of paid group. By paid group, it's really a way for you guys to sort of show me a little bit of appreciation. It's going to be a very minimal charge to join the group. Not 100% decided, but it's going to be extremely affordable. Something like a subscription on Netflix or something like that. And you'll get a newsletter, you'll get weekly calls with me, and also you'll get access to a private Discord for the members of that group where we can sort of talk about things and I can give you feedback on markets on a day-to-day basis and what I'm doing. Because I play these markets, I trade them. Short-term, not a lot of high probability trades going on at the moment, but our bias is if we're looking to swing trade down, the market goes down and we are positioning accordingly and looking to actually short aggressively to the downside for that next leg, but also realizing that, look, relief rallies in downtrends occur frequently. So we are looking at coming down to these lower bands, just like you've done previously. You know, you can see this when you break it, you come down, and often you'll actually come below it. I think that's definitely a probability here, and this is what we're looking at. Right now, that band is currently at 23K. I think you could come a little bit below. Anything below 20K, then we really need to talk about things because it takes out a prior low of a cycle. And that's something that we really need to look at. But it's all very dependent. Crypto is not right now moving off of its own merits. It's moving off of the merits of the economy generally, the Fed, and a number of other things. And what I want to do quickly is just look. Yesterday was a brutal day for the stock market. And I actually thought that crypto held up relatively well. Crypto seemed to sell off to less of a manner than the stocks. Crypto is typically a higher beta. And could that be because we've already seen so much sell pressure? I mean, if you look on the weekly, how many red candles we've had here, you know, usually you get some sort of relief. And that's why I say it's very low probability for me trading the short term right now. Because yes, we've got some active shorts on at the moment, but I will cut those shorts the second I see these markets turn because it's not high probability. And I am expecting at least some sort of a bounce more than what we've currently seen to the upside. I expect a little bit more upside than this, or certainly I'd like to see that, certainly get above this 30K range, maybe come into this prior accumulation zone before we get that next leg lower, and we'll aggressively short that. Talking about the stock market, of course, we don't want to look at AVAX. I mean, look at where this is. It's actually quite shocking to me that crypto hasn't spilled to more of a manner, to more of a degree. I mean, over the past 2 days, the S&P, ES, which is the mini futures, is down, you know, nearly 6%. That is extremely significant, and I'd have thought that would have caused more of a sell-off in the cryptocurrency market, which has actually remained relatively stable during that downturn in the stock market, which is something, and we'll look at, and what I'll do is overlay the Bitcoin chart with the S&P and the Nasdaq in just a second. I also watched the UK markets. FTSE closed pretty hard today, or has opened pretty hard on the downside today. We'll see how the day progresses. You know, ultimately, when I say it's low probability trading, my reason for saying that is, look, I am expecting some sort of an upward move for markets, at least a relief rally, or that's certainly what I'm kind of hoping for, I guess. And hoping, you don't want to trade on hope. You want to trade on structure and setups. See what gold's doing. Say gold's seeing a bit of an uptick. You know, your commodities are actually starting to see more upside continuation. You know, if we look at nat gas, we look at WTI crude oil. We can look at a number of things. That's a USD peg, which isn't doing very well. You know, we're ultimately expecting this market to get worse. And this is an article from Zero Hedge saying, don't fight the Fed. This is from JP Morgan, cuts US GDP, don't fight the Fed. So GDP is gross domestic product, or gross domestic production. So it's essentially saying, or productivity, sorry. It's essentially saying that, look, things don't look great. We are lowering expectations for GDP growth in the second half of 2022 and 2023. The Fed is gaining traction in getting the desired tightening in financial conditions. A stronger dollar, lower equity prices, and higher mortgage rates will weigh on the growth demand. Over time, weaker output demand should lead to weaker labor demand. Don't fight the Fed, as this is what the Fed wants to do, slow growth. So the Fed are telegraphing everything that they're doing, and they are actively trying to slow markets, to fight inflation via killing off demand. And that demand doesn't just go as far as the commodity market, which is moving, and that demand is really pent up and bottlenecked. That demand goes to the stock market. And this is what we're seeing. What they're doing and what they've got set in motion right now is working, guys. And that's why our outlook is a bleak one for the short term. And Paul Volcker was somebody that aggressively raised rates in order to fight inflation. And this is the Fed fund rate here. If we look at Volcker's era, which was back over here, guys, you can see just what Volcker did. It was unprecedented, and it really caused a slowdown. The S&P isn't the best metric to use to do this, but it really caused a huge slowdown in markets and actually led into, a recession because, it was quite devastating, the interest rate hikes, and sort of caused everything to come off. And there is a huge correlation between your Fed funds rate, your interest rates going up, and markets suffering at the hands of it. And that's what we're expecting. We've not even really started the hiking cycle, and we've also not started the reduction of the balance sheet, which I think is going to have a huge effect that I don't think people have priced in. So our outlook is a bleak one. We've been saying for a long time now, and it wasn't our analysis that came up with the head and shoulders on the likes of the NASDAQ Composite, the S&P, the Dow, and a number of other things. It was the market sniper, the crypto sniper, Francis. And we've been following that and saying, look, if given the correlation that we have with the S&P and the equity market, if they go down, it doesn't matter that crypto's already gone down to a degree, some altcoins 80%, they can still go down significantly more. And what people don't realize, and it's something that's a pet peeve of mine, is people go, oh, well, we're already down 80%, how much further can we go? And they think there's only a 20% margin there. If you're already 80% down, you can still go 99% down. If you go down another 99% and you've only got that 1% left from where your initial high was, you can still go down another 99% and then another 99%. Things can continue to, and I'm not suggesting that's what's going to happen, but things can go down significantly more regardless of whether it's already sold off 80%. You can go down another 80% quite easily. And that's what people fail to realize. And we're failing to get above this 30K range, I am looking for an upside, but I'm just, it's hard for me to really get a good envision of that, given what the stock market is doing. I mean, this is an awful start for the FTSE, which I watched for a number of family members, and also the S&P. If your stock market's doing this, well, there's a huge correlation between the crypto market and it, and the crypto market's actually going against the grain today. That article also spoke about the dollar. So bring up the DXY. And we've called, by the way, it's having a bit of a rest, which is why you could be seeing the likes of Bitcoin not do too badly, although the stock market is not really in sync with that. The dollar's just having a rest. It's going higher, and when you understand what's going on in the FX market and the sort of monetary side of things, all the fundamental reasons for a higher dollar are there. I mean, look at the likes of the UK and that inflation rate. That's hugely telling and is, has a lot to do with the dollar and the Fed and the monetary policy. And this is where our outlook is derived from. So it is for some depressing. One thing I want to say is if you're too emotional in markets, you're going to miss out on all the opportunities, and they are there. We're shorting the markets, you guys know, and if we go over to my Twitter, we put shorts up for Luna at $84, Rune, NEAR, a whole list of shorts that we gave that we executed, not perfectly, certainly in the likes of Luna that we could have rode all the way down to 0.002 cents. We got out at 30 or the higher 30s. But we're still making money in a downtrending market. And you guys want to be agnostic to the direction of a market and be able to trade either way. And if you want to be a hodler, you fall back on the kind of, growth of this emerging technology. So that's largely what I've got for you in the video. What we'll do actually very quickly is I'll actually pull up not the Dixie, we'll pull up the S&P and we'll pull up the NASDAQ 100. And what we're going to do so you can see there is still a correlation. We'll put it down to the 4 hour. But at the same time, I mean, there is a massive correlation here, guys. But at the same time, there is people are going, okay, well, have we decoupled? Because this is going down. Crypto is somewhat not, but does that mean that it rolls over a little bit later? That's certainly a possibility that I'm sort of watching. We've been look how correlated we were over here, guys. But then I'm thinking, did crypto really just front run these markets? But right now, in terms of trading, things are extremely low probability as far as I'm concerned on the short term. Swing trading, we're still looking for that downside, but ultimately what I would like is a little bit of a move to the upside before we get that continuation to the down leg. Not a given. Markets are very weak at the moment, and of course, I think there's risks on both shorting and longing right now. And I think there's actually more risk on the long side than the short side because any kind of a rally can get killed off very fast, given everything happening. So that's really all I've got for you. We made a promise when we first started this channel back in August of 2020 that we were going to be here through the good times and the bad. And that's exactly what we're going to do, guys. We're not going anywhere. We've got a lot of things right in this market. We've got some things wrong. Everybody does. That's how this game goes. But ultimately, and if you look at your big hedge fund managers, by the way, a good win rate is 53%. I'm reading a book at the moment about being a hedge fund manager and how you can get into that kind of game and the sort of criteria and skill set that you need. And good hedge fund managers typically will, get sort of 53% is a good win rate for them. We've smashed that in terms of crypto. And we've pointed out coins that have gone on to do exceptionally well, whether that be Cardano at your cents, whether that be Chainlink, whether that be, a whole list of currencies, even Ethereum here, you can see we were calling it, and we called it a lot sooner than this actually on the channel when it was sub $300 into your sort of $200 range. And these things have done exceptionally well, gone on to 10x and then some. And, that's what we're ultimately looking at moving forwards from an investment point of view. From a trading point of view, we're looking for volatility and swing trades to either the up or the downside. So that's really all I've got for you in this video, guys. If you have enjoyed this content, a like is appreciated. So is a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a fantastic Thursday, guys, and I'll catch you all in the next YouTube video.